Sudhir Pai joins us now, CEO with Magicbricks. They are one of the foremost authorities in terms of understanding and dissecting real estate trends. It's a portal where you can buy Sapno Ka Ghar, rent it out, make more money. So let's understand all the trends. Sudhir, so nice to connect with you. Sudhir, I'm sure you must have heard opinions from DLF, from Mac, even from Prestige. The developers are sounding gung-ho. Now, typically the real estate cycle, what all of us have seen is a 5 to 7 year cycle. 5 on the lower side, 7 on the higher side. Some would argue and say that almost half of the cycle is over. I mean, in Hindi terminology, picture ka interval ho gaya. Would you agree with that?
Good morning, Nikunj, and thank you for having me on the show. I think I heard all of those voices. I think real estate has had possibly the best 12 to 18 months in about a decade. So there are a lot of grins and smiles on everybody involved in the space, no doubt. But we are seeing a few, now to Magicbricks, we see early demand data. In some sense, we see what's likely to come a few months later, because these are demand trends. So people who are searching, they buy a few months later. I think we are seeing a few interesting trends. One, prices no doubt are up. They're up about 30% on a YOY basis. But we are seeing prices moderate, right? So if you see the sequential quarter-on-quarter price growths, 2 quarters back, it grew 6%. Last quarter, it grew 3%. So we are seeing some bit of price moderation that is sort of creeping in. But otherwise, sales risk, I think the last 2 quarters have seen possibly the best amount of sales in more than 10 years. And I think the next 12 to 18 months will continue to stay strong for real estate.
Unsold inventory.
Sorry?
No, unsold inventory, something which often is a benchmark to understand which way the demand is moving. So while we're talking about demand trend strong, a lot of new projects are also getting added to the system.
Well, unlike 2014, in which there was a lot of distress in the developer market, and there was a lot of not just unsold inventory, there was also unfinished stock. We are not seeing too much of that this time, right? So supply has also been short. In fact, supply has grown a lot lesser than demand. If there was adequate supply, possibly the amount of transactions which have happened could have been a bit more. But you're right, there is more supply coming. So how much of headroom is there of future growth in transactions or prices, I think will depend on affordability. I heard Mr. Irfan say that. It will also depend on rental yields, and of course, depend on the sentiment in the market. But there's not so much unsold stock today compared to what it was about a decade back.
So if I compare the major metros, or let's say the 6 major cities, the price appreciation stands out in the NCR region. Now, depending on the cut you look at it, NCR prices have gone up in the last couple of years by at least 50%. No other city has seen that kind of a real estate price and demand surge. What's so unique and special about NCR?
I think in particular, Gurgaon, and of course to a lesser extent Noida, I think there are 2 things at play. One is the premium and the luxury segment have really done remarkably well in Gurgaon in particular. The other thing that sets NCR a little different from the rest of the country, you refer to this 5-year and 7-year trend, right? So now one thing that shortens that trend is investors entering the market. I think relative to most of the cities in the country, the share of investors who buy homes is a lot more in NCR. Prices tend to move up much faster, and cycles therefore also end up being shorter.
Now, for our viewers who are looking at investing in real estate stocks, like I said, that you are in the perfect place to share insights. Demand is something which you've already alluded to. What about pricing? Because for companies to make money, demand is one, but pricing is something which kicks in automatically at the bottom line. How do you see the price trends moving? Will they grow in line with India's GDP, or will the price trend growth be lower than India's GDP now?
See, if you look at the last 12 to 18 months, prices have risen considerably, right? Way ahead of GDP, if you were to use that benchmark. So they've grown 22%. In fact, under construction homes have grown even higher at about 30%. We see that moderating. I don't think you're going to see those kind of price increases over the next 18, 24 months out. It's also healthier if prices were to not increase in large spurts, because when that happens, you end up with a larger of investors rather than end users. And over the long period of time, the end user who carries the market, right? So I think moderate price increases will be healthier for the market. We are seeing prices moderating. Like I mentioned a while back, sequential price hikes are coming down, and we think therefore, the price hikes in the next 18-24 months will be a lot more modest than what we've seen in the last 12 months.
So seen a revival in the rental and the commercial market. Has that also gained some more traction?
Yes, rentals had done very well when companies were instituting a back to office mode. In most cities, we saw rentals spike up by as much as 50-60%, particularly in Bangalore and Hyderabad. Rental yields, which typically are in the 2 to 3% zone, had also gone beyond 4.5% in some of these micro markets. But with prices now rising, that's back to about a 3% kind of level. So there's not too much headroom there. Rental yields go beyond 4.5%. Typically, that's a good leading indicator for prices to rise. Those are back to about the 3% kind of zone now.
Possible for you to share data with us that in which particular which particular pricing category the demand has been the strongest? I mean, under 5 crores, under 3 crores. What are your observations there?
I think these are different basis city and micro markets that you look at. But if you were to take a pan-India average view, it is the 7,500 rupees to the 10,000 rupees per square feet bracket, which is the strongest amount of demand, right? And the average size of a home is about 1,200 to 1,400 square feet, right? So that's the price bracket in which you see bulk of the demand.
Most of the developers are maintaining that right now the demand is fueled by genuine buyers who need house, either their families are expanding or they're buying their first house. The so-called investor money has not come back into real estate. That is moving into stock markets. What is your take on that?
Well, I think depends on market to market, but there certainly are investors who are buying, and that's a function of the market. When prices rise very fast, the investors do swoop in because you do want to make a quick buck. Based on the market you're looking at, and based on the project you're looking at, there could be as low as 10% of the investors buying to as much as 60-70%.
Market which you
I think when prices are moderating, you'll find more end users. But when you have price increases that happen every 2 or 3 months, there are bound to be investors in the market.
In the market which you represent, which is, let's say, which could be called as online, online property brokerage, what are the 3 big trends, and where do you see this industry is moving, given that there is intense competition which is now coming within that space?
We don't do brokerage, Nikunj. We are an online search and discovery portal. So in our industry, I think we are pushing ahead on 3 fronts. One, of course, the core platform. We continue to scale the platform, which means get more people searching for homes, get more owners and sellers put up their property for rent or for sale. Outside of that, we're doing 2 things. One, we are moving closer to the user transactions. So we have launched a site visit business. We take users, advise users on what are the projects available in the market, and we take them on visits. And we have got ourselves into a set of adjacencies. So we started distributing home loans. We started doing home interiors, doing packers and movers, and a bunch of property services, which come into play when the user is either about to transact or post-transaction.
Just to put up with one final question. Now, what we've seen post-RERA is that the big developers are becoming mega developers. There seems to be a clear trend which is visible towards large developers. Do you see this trend only gaining more traction?
Yes. So pre-RERA, we reckon there were about 40,000 developers in the country. Now, based on the city you're looking at, that would have shrunk as much as 80 to 90%, right? And the market continues to consolidate. I think the large developers are getting better. Their products are much better. Their delivery is much better. So there's better trust and reputation in the market. So I think that trend will continue to hold.
Thank you for giving us a sense as to how business is shaping up, and more importantly, what the trends are when it comes to demand as well as pricing. Let's shift gears.
If you like this video, then like, share and subscribe to ET Now.